Good evening, guys. Good evening, everybody. Okay, today I want to work with you guys on basic structures, on understanding market structures. You know, that's with real time on chat. Earlier I sent a message out on what structures are made up of. Structures are basically made up of higher highs, higher lows, lower highs, lower lows, structures on itself, and break of structures. And now these formations happen on higher time frames and on smaller time frames. Okay, earlier this morning I did a top-down analysis for how the day should go, and I want you guys to radio in and focus on something. Let's go to a higher time frame. Let's say the 1 hour time frame. Now let me just use the immediate chart so we don't go into a lot of details. Now pay attention here. You'll notice something. Now structure is basically um, a balance which market moves in. So as long as market movement is concerned, there will be what we call a break of structure. There will be what we call a, an order flow. That is what we call a trend reversal. That's a retracement, and there will be what we call a continuation in such order. Let me give you an example of what I mean. Now in this case, look at this structure. Let me replicate this thing written here. This is pretty much what's in here. This is pretty much what's in here. Now so long as this thing I drew out is concerned, this point this point here is a higher low that was taken out by price movement, which in the other end this is called a change of character. Now pay attention here. At this point, which is actually here that you're looking at, there was a break of structure. Moving up. Now after this break of structure moved up, normally we expected that price will come down to this point to find retracement, inducement, or whatever here. But because of the higher time frame involvement, price broke structures to suit what's happened on the higher time frame. But we're not going to that for now. Let's focus on basic structures. Price came down here, took out these structures, this point, which changed price movement from a bullish environment to what a bearish environment. Now pay attention. Immediately price took out this point. Look at what we are seeing here. Price did a retracement. Let's go to a smaller time frame so you get a better picture. Price did what? A retracement. Now because of this, let me make it bolder. Because of this smaller if you look at these places now, if you go to a 5 minutes or a 1 minute time frame, you see clearly, you have clarity on this. Let's just do that briefly so that you get my point. So on the 5 minutes, you notice that look at this break of structure. Market comes down to a reversal point, a point of interest, breaks under structure. Market did the same thing here and continued. Now look at this place. Market came back here, broke the structure, and retraced into this point before continuing. Now because of all those things happening, market went back to what that point of interest, which is here. What is it looking for? Liquidity, inducement, fair value gap, whatever the case is. But in this case, is looking for liquidity. In this case, so market pulled back. Now that is what the general view. Now mind you that in the large scale, there are smaller trades that that runs in line with large scale. Let me explain. Now we have this view that market is coming back to this area. Now how do we maximize that? Now that is view number one. View number two, whenever a break of structure happens, 80% of the time market retraces onto what I call a 50% margin of the existing range. That is, you pull up a Fibonacci, which is this tool here. If you draw up a Fibonacci and draw it from beginning of the trend to where the trend reverse point from, you realize that market pulls back into what, at least a 50% of the trend, although most times it cannot stretch to above, to what we call the OTE. That's the sweet point, optimal trade entry. I'll explain that later. But now, because we're expecting markets to pull back into that much, yeah, we start looking out for smaller structures that will form in line with the bigger structure. What are we looking for? The same thing I drew out here, but now in the opposite direction. The same thing I drew out here, but now what, like I said, in the opposite direction. We're looking out for break of structures like this, retracements, break of structures. Some people call it trends. So in this case now, because one, we found this trade on a 1 hour time frame generally, and we came down to a 15 minutes time frame for clarity to see where we are looking at taking out liquidity or inducement, depending on what the chart looks like. You get? Now what do we do to get these trades that are forming out in this environment? What we do is very simple. We come down to what, a smaller time frame, and in this case the smaller time frame is what, the 5 minutes time frame. Now pay attention. Now normally, if we have a smooth run from this point, yeah, I don't take this trade. See how I count my trade when I'm trying to pick out order flow that is running in line with the bigger structure. Now this is basically order flowing back to your liquidity, like I explained. Now this is the tip of the market. This is the first retracement. I don't trade this one. Normally people will put in buy trades from this zone expecting price to rally up. I don't trade there because most times it manipulates, like we saw here. It manipulated and took out this point. Now when it took out this point, this place now became a protected point. Look at what happened. Price rallied. Now because of the let me make it larger. Because of the extensive rally price did here, price came back to the tip to grab what, an entry. As you can see, that's where my entry point is. Price came back to the tip, or to do what, to grab an entry. After price grabbed an entry, if you go to a smaller time frame, you see that price broke structures, a smaller structure confirming this trade here that gave me this smaller trade. But then it's a 5 minutes trade, so I didn't need confirmation to enter that trade. Now that's the first one. Yeah, like I said, so that's how I got this first trade and second trade. Now mind you, after this first break of structure, his point became a protected point that gave rise to the next break of structure. Let me come down to a smaller time frame so you understand where I entered my trade at that point. Now on the 1 minute time frame, now look at this. On the 1 minute time frame, price had a break of structure here, like I explained earlier, that made me enter trade here. Yeah. Now after this second break of structure here, we are expecting price to come and take out this low. But then pay attention very well. You notice a small inducement that formed here. Because of this inducement, that is basically price, instead of rolling down straight, it's formed a new higher low in this point, which made that point what, an inducement. Now immediately that happened, I realized that this point has become a protected point. Now, can manipulation happen in the market? Yes, this is good. It happens a lot. But then Because of that, I know that this place has become a protected point. So maximum stretch I was expecting for market is to come and take out this place, because there's nothing holding price from coming to this place. Now look at what happened. Market did the first touch, rallied up, came back, did the second touch to take out the people that put their stop loss under here. Immediately price took it out. Guess what? Take profit happened. Now all these things are just in line with what the original trend, flowing back to where the original trend. This is basic what break of structure what and what order flow. Now why did I take this last trade? I will show you. Now after I took the second one, I counted my trade. Look at it. First movement 1, second movement 2, and what third movement. I respected myself and waited. Reversal can happen, manipulation can happen. As I said, manipulation happened here. This low was taken out. Now, which was not a big deal. I cannot sell from that point because price has not fulfilled the range I was expecting from this angle. But guess what happened? Price broke a higher structure. Now, because of this low taken out and this low being taken out, there's a higher chance that this environment will be protected. And it played out well. Look at it. Inducement happened there, leaving a price gap. The price came back and filled after taking out the inducements, and we have what? A take profit. Price rallied down, took out the lows. I'm not in the trade, none of my business. I'm expecting to see how we will reverse price where from this environment. So basically, whenever there is a break of structure, like I showed you here, there will be what? A retracement into what? Liquidity, into what? An order block, into what? An inducement. And I showed you an example of an inducement in this case. I showed you an example of an inducement in this case here, where instead of price, let me make it bolder. Let me remove this. Yeah, instead of price reversing straight from the tip, price formed a new low above that initial tip. That point becomes a point of interest, and now price moves. The big money, that's the market makers, move their protected point from this place to where this place. That's where here price could not soar down to take out this low before what? Firing down to our take profit point. So that's pretty much for that on the entry model and structural retracement. There's a lot. Chart will give you a lot. There are many entry models, and as we go, the more I drop one or two. Also, don't forget to come online in the mornings for our FX daily daily devotional. You get, where I drop projections for the day. You get, this one played out from today's projection. That's if you saw it from daily devotions this morning. So have a nice day and enjoy maximum profitability.